Namaste dear students, welcome back. So today I am here with one more illustration on accounting for holding company. Illustration number 5. From the following information, you are required to prepare consolidated balance sheet of P Company Limited and its subsidiary Q Company as at 31st-3-2009. This question has been asked in the year November December 2010 and as well April May 2011. So let us look into the problem. So in the liability side, so we have share capital, shares of rupees 10 each, 3,50,000 P Company Limited, 70,000 Q Company Limited. Reserves and surplus, general reserves 1,05,000 P Company Limited, 14,000 Q Company Limited. P&L account 52,500 P Company Limited, 22,400 Q Company Limited. Secured loan P and Q both are nil. Unsecured loan P Company Q Company nil. Current liabilities and provisions under that creditors 42,000 and 14,000. And next, bills payable P Company Limited nil and Q Company Limited 7,000. The total column of P Company 5,49,500 and Q Company 1,27,400. On the other hand, asset side, fixed assets under that plant and machinery 1,40,000 P Company Limited, Q Company Limited nil. Land and buildings 2,10,000 P Company Limited, Q Company Limited 35,000. Furniture P Company Limited nil, Q Company Limited 3,500. Investments 5,600 shares in Q Company Limited, 84,000 rupees for P Company Limited amount column and Q Company Limited nil. Current assets, loans and advances, stock 28,000 P Company Limited, Q Company Limited 28,000. Debtors 35,000 P Company Limited, Q Company Limited 35,000. And next we have bills receivable 7,000 in P Company Limited, Q Company Limited nil. Bank 45,500 P Company Limited and Q Company Limited 25,900. Both the side total 5,49,500 and 1,27,400. So let us look into the adjustment. Adjustment number 1, bills payable of Q Company Limited includes rupees 3,500 due to P Limited. Adjustment number 2, sundry creditors of P Limited includes rupees 7,000 due to Q Limited. Adjustment number 3, the value of land and buildings and furniture of Q Limited were considered at rupees 40,000 and 3,000 respectively. On the date of purchase of 5,600 shares in Q Limited by P Limited, Q Limited had a general reserve of rupees 7,000 and profit of rupees 5,600. So with this given information, we are supposed to prepare a consolidated balance sheet in the books of P Company Limited. So without any further delay, let us start the solution part. So dear students, we are doing solution number 5. Okay. So it has been asked twice. One is November, December 2010 and April, May 2011 question paper. So twice this question has been repeated. So this is the 5th problem we are doing. So till now, whatever the problem we have solved, it is without majority interest. Okay. So one working note we are not using. So from next problem we are going to introduce that also, so that you will get that idea as well. So how to do with the majority interest. Okay. So let us see calculation of shares of holding and subsidiary company. So what is the number of shares of subsidiary company? That is Q Company Limited liability side, 70,000 rupees, and the face value of each share is 10. Correct. So total share capital divided by face value. So Q Company Limited share capital is 70,000 rupees divided by 10. So that is, we are going to get 7,000 shares. So if we look at P Company Limited in the asset side, how many shares they have invested? Investment 5,600 shares in Q Company Limited, 84,000. So how much? 5,600. 7,000 minus 5,600 is 1,400. Correct. So common factor 2020. So now if we want to simplify this, so this can be happen like 14 ones are 14, 4s are 56. Correct. So that becomes 4 is to 1. That becomes 4 is to 1 as a ratio. Okay. So now let us do the second step, that is calculation of appreciation and depreciation of asset, because you might have seen that adjustment number 3 clearly speaks about the revalued value of land and building and furniture. So where we have appreciation and depreciation as well. So I'm writing calculation of appreciation and depreciation of assets. Appreciation and depreciation of assets. So let us take land and buildings. So balance sheet value. So adjustment value is always considered as closing. So first we are going to write, so that is 40,000 rupees he has given in the adjustment, but in the balance sheet value he has given it as a 35,000. So which is greater? Closing balance is greater. Closing balance is greater in the sense, so there is a increase in the value, so that going to be appreciated. So it has been appreciated. The same way, take out furniture. So furniture closing balance is how much? He has given it as a 3,000 rupees. Correct. So I am writing it as a adjustment value 3,000. It is considered as closing, and balance sheet value is going to be opening. So balance sheet value how much for furniture? 3,500. So it is minus 500. So that means it has been depreciated. So there is a depreciation had happened. Okay, 500 rupees. So now let us set off appreciation and depreciation. Appreciation and depreciation. So that is 5,000 appreciation less depreciation is how much? 500 less 500. So that comes to 4,500 rupees. Clear? So this is final profit on revaluation of asset, or you can say final profit out of set off of appreciation and depreciation. Okay. So we are done with this step. So let us find pre-acquisition profit. So third step, calculation of pre-acquisition of profit. Pre-acquisition of profit. So pre-acquisition of profit, how much they have given in the adjustment, just check out. So adjustment number 4, if you look at, on the date of purchase of 5,600 shares in Q Company Limited by P Company Limited, Q Limited had a general reserve of rupees 7,000 and profit of rupees 5,600. So pre-acquisition profit how much? 5,600, correct? So let us take pre-acquisition profit 5,600, add this set of final profit, we got 4,500, add set of profit 4,500. So if you total 10,100 rupees, 10,100. So next step is calculation of minority interest. Calculation of minority interest. So cost of shares, how many shares minority here we got? 1,400, right? So 1,400 shares, face value is 10 rupees. So that is equals 14,000. Okay, then add total reserves. Add total reserves. So how much reserves in the Q Company Limited? Go to the balance sheet and check out. It is 14,000 into what is the ratio? 1 by 5. For minority 1 by 5. So 14,000 into 1 by 5 if you do, you're going to get 2,000. 14,000 into 1 divided by 5. 2,800. So that is 2,800. Okay. Then add profit, pre-incorporation profit. So that is, we have done 10,100. 10,100 into 1 divided by 5. So that comes to how much? 2020. Use the calculator. 2020. Then add total profit. Total profit. So how much total profit we have? Check out in the balance sheet. Q Company Limited profit column, 22,400 is given, less pre-acquisition profit 5,600, which has been given in the adjustment that you need to deduct. So whatever left out you will get into 1 by 5. So 22,400 minus 5,600 into 1 divided by 5. 3,360. 3,360 rupees. So now total it. So 22,180 rupees I am getting. That is as a minority interest. Minority interest. So I got minority interest 22,180. Okay. So let us calculate cost of control and goodwill. So next working note number 5. Calculation of cost of control. Calculation of cost of control. So under that, break down investment of holding company. So that is asset side. How much investment it has been made in the Q Company Limited? So they have given it as 84,000 rupees, correct? 84,000. So take that 84,000. Okay. So then less face value. What is the number of shares held by holding company? 5,600 into 10. So that is 56,000. So deduct that 84,000 minus 56,000. So that is, the balance is 28,000 we get, that we consider it as a goodwill. Okay, 28,000. So after that, we have to do the calculation of pre and post acquisition profit. So sixth step, calculation of pre and post acquisition of profit. Okay. So first let us take pre-acquisition of profit. So we had got a 10,100. So that I am taking from working note number 3. You can just check 10,100. So that majority is how much? 4 divided by 5. So this we are going to calculate 10,100 into 4 divided by 5. So that is 8,080. 8080. 8,080. Okay, so this should be transferred to capital reserve account. You should remember always that. Okay, so next is post incorporation profit, which has been given in the balance sheet, 22,400. balance sheet Q company limited, 22,400 minus pre-acquisition profit 5,600. So that we will get, if you deduct 22,400 minus 5,600, we'll get 16,800 into 4 divided by 5. 16,800 into 4 divided by 5. So 13,440. 13,440. This we should transfer to P&L account. P&L account. So next is reserves and surplus. So that is reserves. So under reserves we have to take like pre and post again. So pre-acquisition reserve, how much he has given, that is in the adjustment 7,000. Adjustment number 4 if you read. 7,000 into 4 divided by 5. So that comes to 5,600. This needs to be transferred to capital reserve account. Okay. The same way post acquisition. So check out in the balance we have 14,000 minus pre-acquisition 7,000. So the left out is 7,000 into 4 divided by 5. So if you do that, you are going to get again 5,600. This needs to be transferred to P&L account. Okay. So working note we are done with. Now we have to post this into the respective account. So let us post it. So open the table for preparing consolidated balance sheet. So let us prepare consolidated balance sheet. Let's prepare consolidated balance sheet. Consolidated balance sheet. So take down particulars, rupees and rupees. So first we always take share capital. Q company, P company limited, share capital. So that is 3,50,000 rupees. 3,50,000 rupees. In the second head, we always have reserves and surplus. Reserves and surplus. So under that, take down general reserves. General reserves of H Company Limited, how much? P Company Limited, 1,05,000. So I'm taking directly 1,05,000 rupees. Then we have CRR, Capital Redemption Reserve Account, so which we have done in the working notes. So that is 8080, which we have identified in the last working note. So that is working note number 5, I think, right? 6. Working note number 6. So if you look at that, you will get that 8080. Then also we have identified 5,600. So total this two and put it to outer column. 8080 plus 5,600, 13,680. 13,680. So then we have to mention P&L account as well. So P&L account of H Company Limited, how much we have in the old balance sheet? P Company. So we have 52,500 rupees. So then in the adjustment, whatever we have identified in the working note number 6 and 5, right? 6 and 5. So that is 13,440 and 5,600. So 13,440 and 5,600. So this is, we are done in the step 6. So if you want, you can mention for your reference step number 6. So we did this. So now total it, 52,500 plus 13,440 plus 5,600. So that is 71,540. 71,540 rupees. Okay. So next is creditors. So that comes under third head. We are done with the reserves and surplus head. So now we are supposed to go for next head. That is non-current liabilities. Non-current liabilities. Do you have any non-current liabilities in this problem? Just check out. Secured loan and unsecured loan, both are nil. Both are nil. So it is nil. So in the fourth one, current liabilities. Current liabilities we have to check. So first we are going with creditors. So creditors. So P Company Limited creditors value how much? 42,000 plus Q Company Limited creditors value 14,000. Okay. Then minus adjustment number 2. Sundry creditors of P Limited includes rupees 7,000 due. So that means internal transfer. That is how much? 7,000. So 42,000 plus 14,000. 42,000 plus 14,000 minus 7,000 adjustment number 2. So 49,000 is amount column. 49,000 in the amount column. Okay. So next we have bills payable. So P Company Limited bills payable, how much he has given? Nil. Q Company Limited 7,000. But for bills payable also there is one adjustment, I believe, right? Adjustment number 1, bills payable of Q Company Limited includes rupees 3,500 due to P Limited. So then internal transfer, that becomes minus 3,500. So left out 3,500 to the outer column. So the last but not the least, minority interest. Minority interest how much? 22,180 rupees. 22,180 rupees. So if you look at adjustment working note 4, so you will get to know 22,180. So now total it. So that comes to 3,50,000 plus 1,05,000 plus 13,680 plus 71,540 plus 49,000 plus 3,500 plus 22,180 plus. So 6,14,900. 6,14,900 is the answer for this. Okay. So let's move to the next asset side part. So when we go to the asset side part, so we have to be very careful about this one, depreciation and appreciation. Okay, so first we are going to take in the fifth head, non-current assets. That is nothing but fixed assets. Nothing but fixed assets. Okay. So now let us take non-current assets. That is nothing but fixed assets, one by one. So first item we have plant and machinery. Plant and machinery. So no adjustment at all. Directly I am taking 1,40,000 of P Company Limited. Q Company Limited nil. So next is land and building. So P Company Limited 2,10,000 plus Q Company Limited closing balance we should take 40,000 rupees. So 2,10,000 plus 40, 2,50,000. 2,50,000. So next is furniture. Since there is no furniture in P Company Limited balance sheet, but Q Company Limited it has, so you have to take adjustment value. So that is 3,000 rupees, since we consider that as a closing value. Then goodwill. So that also we have identified in the working note. So goodwill value is 28,000. Take 28,000 directly. So after that, sixth head is all about current assets. Current assets. So which are all comes under current assets? That is stock. Stock of P Company Limited how much? 28,000 plus Q Company Limited stock is 28,000. So 28 plus 28,000, 56,000 is stock. Next we have debtors. P Company Limited debtors value is how much? 35,000 rupees plus Q Company Limited 35,000. There is a internal adjustment which we have reflected for creditors, that is 7,000, that you need to deduct. So 35 plus 35 minus 7 is 63,000. So then we have to do bills receivable. Bills receivables. Bills receivables. How much? 7,000 rupees in the P Company Limited. Nil in Q Company Limited, but there is an internal transfer of 3,500 as per the adjustment number 1. So that 3,500 should be deducted. So you will get 3,500. So next, check bank account 45,500 plus 25,900. P company and Q company. 45,500 plus 25,900. So total, put it to outer column, 71,400. So I believe I have considered all the items. So let me check with the total whether it is going to get tally or not. So that is 1,40,000 plus 2,50,000 plus 3,000 plus 28,000 plus 56,000 plus 63,000 plus 3,500 plus 71,400. So 6,14,900 rupees. So both the side got tallied. 6,14,900, 6,14,900. So we'll stop here. We'll continue in the next session. Till then, take care. See you soon. Bye bye. Stay safe. Stay home.